We're going to go ahead and I want to start a little early. I'm going to talk a little bit about the markets because I know people watch this video after I record it. I get, over 1,000 views typically. So I'm going to record this part. And then by the time I'm finished, then I think we'll be ready for the live stream part, the stock symbol analysis. So we're just going to go ahead and jump into it. Let me move to our live scene and get going. Get going here. As you can see, the markets are selling off. And got a lot going on in the world. Okay, a lot going on in the world, as you can imagine. So let me get my camera on for this part of the video. So what I'm going to do here is talk a little bit about the macro picture, markets at high level, the news over the weekend based on how I've interpreted, and then, kind of just a high level overview of where I think the market's going. And then we'll go into, the super chats like we normally do. All right. So let me turn on my camera. I think we're good to go. Yeah. So hope everyone had a good weekend out there. And we have got a really interesting week ahead of us, as well as the month of April. We could be entering into a historic period with the market. And we'll know that pretty soon. I do believe that. So overall, when we reflect back on last week was definitely a risk-off week. We got to see some more definition of the structure of the correction. And we're really starting to see the market not just react to the primary energy shock, but now they're repricing a persistent supply disruption. That's going to feed into prices across the economy. So we got to remember, the oil is not flowing through the Strait of Hormuz right now. It hasn't been flowing. Anything you've read otherwise is a lie. It's propaganda, AI news. You can go to many different dashboards online and see the real-time traffic. I think I saw 3 ships out of typically a day that would have 50 today. So it's not moving. 20% of the oil supply is gone. It's not the 1970s. The 1970s, the oil supply was merely just diverted and didn't really disappear. Went into black markets, went into other areas of the world, and even back into the United States, potentially. So this is different. The oil is gone. And then you have the helium just sitting there, going to expire soon. We have natural gas missing. This is going to have a ripple effect through the global economy. It's going to affect prices. It just hasn't, the transmission hasn't fully occurred yet, but it's happening now. Investors are asleep at the wheel thinking this is going to be solved tomorrow. What we heard over the weekend is more troops are being deployed. We heard comments that they may be there now, not several days, several weeks, several months. Now, that kind of language is being, communicated. So we have a change. We also have Iran hasn't changed their position. They've only hardened their position. And now time is an ally of Iran. They can run out the game. They can run out the clock on the U.S. and Israel strategy. They don't have to do anything. They can actually use the negotiations to delay and defer, because the new status quo benefits Iran. The new status quo, the new homeostasis, where we are right now, everything where we are benefits them. They are getting a toll paid to them, and it has been able to help fund their military, as well as sanctions have been removed from their oil as well. So they're benefiting from this current state. They have no incentive to change that. Why would they? There is no incentive. So the U.S. and Israel need to speed up whatever plan they have, because the global economy doesn't have time. There's a lag time between the solution to the effect. Even if they conquered Iran and got this island today, you would be 3 to 4 weeks before things could even get back to normal. We may already be past the point of no return, just no one was willing to tell you that. So as each day passes, the crisis is only getting exponentially worse, not better. Iran will try now to run out the clock. I believe they don't want to stop launching missiles, but they don't want to go too hard because then, of course, that could provoke a much more aggressive response and speed up the climax and the climatic, portion of this, conflict. They want to drag it on. They know they can run out the clock and try to collapse the global economy. They view that as they win and you lose. So this is a bad situation. If you're an investor, you do not have to go down with the ship. You do not have to hold and just watch your hard-earned capital go lower and lower. There is nothing noble by doing that. Only a fool would do that. I watch on TV and all I hear about is I just want to close my eyes and not look at my 401k balance and it'll go away. It's not going to go away. We know when the markets pull back, sometimes it takes a while, if not years or decades, to come back to those highs. So pay attention. Don't be asleep at the wheel. Ignore the information around you and do what's best for you. So as we talk about, the oil, is definitely driving this situation, but it now is cascading throughout transportation, food, chemicals, as well as manufacturing inputs. So this is creating broad-based price transmission effect everywhere. So you're going to see outsized pricing moves soon, and we've already started to see that. We're seeing interest rates rise to compensate for this inflation. Situation we're in, not easing. Bonds are not acting like a safe haven. Rallies are going to fail, and they'll continue to fail until this situation's resolved. So right now, the only sectors that are working are energy, some commodities, and businesses that do have pricing power. Okay. But overall, I kind of see this market in five phases, and we're going through this multi-stage transition. I think the first phase is phase one, initial shock. Energy and geopolitical disruptions have triggered a rapid move higher in oil and key inputs. Of course, that's the initial shock. Markets will initially treat it as a temporary, transitory, event-driven, situation. Volatility spikes, comes back, maybe is muted, but investors expect normalization. They're optimistic. They're hopeful. That's phase one. I believe phase one ended last week. Phase two is price transmission. Higher energy costs now begin flowing through into freight, food, chemicals, manufacturing, and consumer goods. Diesel, fertilizer, and petrochemical costs begin rising across the system, and inflation broadens beyond oil alone. This is the next phase, and this is the phase we are in now. Then at some point, we transition into margin compression. As Q1 earnings start coming out, there'll be earnings releases more than likely dropped early. Warnings, guidance will be lowered. Companies will have to absorb the higher input costs, and their margins will tighten, especially in fuel-sensitive and consumer-facing sectors. Prices will also rise. That's the phase that's coming up in April. That's the phase that's going to come in the middle to the end of the month, perhaps into early May. Margin compression, when fundamental investors, get punched in their face with the reality of the situation, when analyst downgrades have to start, when price forecasts have to be adjusted. The companies will not be able to hide this problem. They'll have to report it, and it will be factored in to their annual forecast. They will use this also as an opportunity to throw the baby out with the bathwater as well. They're gonna throw the kitchen sink out. They're gonna write off anything they can. So Q1 earnings is likely to be not what fundamental investors are going to expect. They haven't even thought about that yet. Earnings is going to become much more dispersed, and there'll be very few winners, if any. And that phase is just starting to develop. while we're in phase 2. Then we move into phase 3. Phase 3 is demand destruction. This is the phase everyone thinks we may be in this week or tomorrow. We're not there yet. We're not there yet. And I'll talk about demand destruction a little further, a little later on after I say this. What is it for if you don't know? Higher prices begin to reduce consumer and business demand. Discretionary spending weakens, industrial activity slows, credit stress and refinancing pressure increase. And this will occur as oil stays elevated. In COVID, demand destruction was instantaneous, so oil crashed immediately. In the 1970s, demand destruction never fully, took place. It was a long crisis drawn out. In this crisis, I think people, again, through optimism and hope, based on what I can read out there, think demand destruction is going to be their savior. It's going to bring oil back down to $50 tomorrow. I hate to break it to you, but that's not the case. Demand is inelastic. There's many uses. There's many people out there that will pay whatever they have to get oil. Jets will still have to fly. Bombs and weapons and tanks and all that is still going to have to move. You got the military. You've got governments. World governments. You have critical food supply. They will pay whatever price. There is inelastic demand that will happen. There's also the haves and have-nots. The haves are more than we've had ever in this world, and especially in the United States. They're going to pay whatever they have to pay, and it won't be a big deal to them. So I do not think there's going to be this dramatic demand destruction at first, okay? But it does happen, and it will come, and that will be phase 4. But I don't think it's going to happen tomorrow, like I'm reading from people out there that are more, again, hope-driven, optimist-driven. And again, that doesn't seem hopeful either, right? That's saying we have a recession or something worse. And then phase 5 is after the demand destruction occurs and everything is kind of collapsed and imploded. Then you have the reset and stabilization. And of course, inflation comes down, supply and demand rebalance, policy response actually starts to work, and then markets begin setting up for our next cycle. And that's where you put your money to work. So I believe we are in phase 2 right now, price transmission, as we move into the end of Q1 and into Q1 earnings season. That will be margin compression phase, and then finally you'll get demand destruction, which will be essentially your market crash, since the strongest move lower, and then stabilization. Okay. So that's what I think is happening. So that's the process we have to move through. Okay. That's the process we have to move through. What I've told my elite members is how to, position your money through this in our weekend update, if you're interested to know each phase. All right. And just kind of looking through my notes. Again, these notes, this is the same information I provide my elite members every weekend. I did want to mention COVID. In COVID, like I said, the demand collapsed instantly. So this is different than COVID. Okay. And also, this is a supply issue, right? This is a supply constraint issue, and prices are likely to stay elevated. Because again, demand is still functioning, transportation still running, industrial activity is still ongoing, consumers are still spending as of now. So prices will rise first and then demand adjust later. Okay. So we talked about this again, inelastic demand. Why people cannot quickly reduce consumption, businesses cannot immediately change inputs, infrastructure is built around energy use. And again, people still will need to drive to work. Logistics still has to get to where it needs to go. Agriculture still needs fuel, and manufacturing will pay what they need to keep their plants running. So even if prices rise sharply, demand will not fall immediately. Demand destruction is not your savior in this situation. Okay. Oil can stay sticky at these high levels. right? Because supply is not easy to replace, cannot be quickly replaced. Demand declines only after sustained high prices, and then inventory buffers are low. So just understand that it's a slow adjustment process to add more supply. Even releasing the strategic reserve is only limited by the plumbing, the actual amount of oil that can get to the end user that you need. So nothing is instantaneous. Everything has a lag. Now, is this the 1970s? It's the only situation that has a similar rhyme to where we are today. It is very similar, but the 70s had a wage price spiral. We haven't seen wages rise. There's no self-reinforcing inflation loop yet, but this is driven by energy, and energy is completely missing. This is a completely different crisis, and it's much more serious. Okay. Also, there's a lot of structural differences right now in the global economy. In the 1970s, there wasn't as much globalization. You have more localized economies, less complex supply chains. But today you have highly globalized systems, complex, fragile supply chains. So what does that mean is disruptions propagate faster and wider. So small disruptions should mean a larger system-wide impact. Also, debt levels are so much higher today, right? Higher rates as they go higher are going to do way more damage to the financials than they did back in the 70s. Tightening will have much more of an impact, greater sensitivity to yields, refinancing risk that could create situations where companies could go bankrupt. There's a faster market transmission. As you know, we have instant information. 1970s, you didn't. You have algorithmic trading. You have global capital flows. And that also means money moves violent, moves very violent. Money is fast and moves violently across the market. And then demand sensitivity is higher. Consumers are much more leveraged. Spending is more rate sensitive. So demand can break faster once pressure builds. So the critical difference in 1970 is inflation persisted due to wage spiral. It took years of tightening to break it, but today inflation is driven by cost shock and supply constraints that is just getting started, and demand destruction will occur earlier. So I think what will happen is we'll go through the same process like we did in the 70s in terms of how the market rotated into asset classes. We'll go through these phases, but it's going to happen a lot faster. It's going to mean price spikes are going to happen faster. The markets can break faster. The cycles are going to end and change faster. The volatility will be much more volatile than people can imagine. That's what's probably coming as we go through each phase. So that's what I think you need to be prepared for. So expect a faster, more violent version of this inflation slowdown reset than the 70s. The 70s, you had a lot of time to get in and out of positions, to wait, to watch, to trade. It was even though it seemed erratic, it was a very comfortable range the market traded within for many years. This situation may not be as easy, but it will go through the same cycle. So think, what if it's a 1929 zigzag crash, but with a 1970 rotational dynamic within that cycle, right? So as you're crashing in a zigzag, your market is violently rotating between different sectors, between defensives, between inflationary, back to defensive. And can you handle all that whipsaw action? Can you beat the algos? Can you beat the quants? Can you beat the computers as it happens? Most people won't be able to. And the volatility is going to destroy them. That's what I think's coming. So that's my take on the situation right now. And I wish things were different. I believe the world has changed compared to what the world used to be. I think if you hope it's going back to the old, what it was, like let's just hit redo, a reset, it can't happen. It's not going to happen. So even if, like I said, there's peace and there's some kind of agreement, Iran's going to come out of it with getting some kind of, financial, toll out of this, I would assume. And they're going to, oil's going to be more expensive. Energy is going to be more expensive at the end. That's what I think will happen. There will be inflationary pressures. If we try to go get the island, it may destroy the whole thing. And then there goes their oil, and then makes it 10 times worse. And then if, and if U.S. just goes back home and says, screw Europe, screw Israel, screw you guys, I believe they would fight it out, and they will still destroy the oil, corridor there, causing costs to go up. And then I think the petrodollar era will end as well. So I do, and which create the dollar would drop, which will create inflationary pressure too. So it's like a lose situation. I wish we could just go back in time and tell Trump, don't do this. Don't fall for this trap, this trick or whatever. And who tricked who? Was it Iran? Was it Israel tricked it? I don't know. And there's a lot of conspiracy on that. But the fact of the matter is, I believe U.S. fell into a trap, and now we're stuck in it. And we're going to have to find what's the best of the worst case outcome, because there's no way we're going to be able to land a few thousand men on that island and take it. It's just not going to happen. It's just not possible. It's a kill box. It will not work. And then even if you could take that island with 100,000 men, you got to hold it. You got to keep it so that ships can go through there safely. Insurance can come back, and there's no mine. And Iran will just be constantly lobbing over bombs and drone. So there's no way ships are going to willingly sail through that. There is no solution. You see, the only solution is a deal. Trump has to make a deal with Iran. And part of that deal, I'm sure they're going to get a piece of the action now, which they didn't have before. But now you have Israel. Israel doesn't want them to have a deal, right? That's not what they want. They don't want a deal. So they're not going to allow that to happen. So that's the problem. So there's a third party in the middle of the deal. And so you're like, is Trump really negotiating against Iran, or is it Israel, or is it Israel and Iran? So this is the problem with the situation. You have a triangle. It's not as simple to one opponent. You have potentially three people in this game that are trying to optimize the situation for their own personal benefit, and that makes it very difficult to predict the outcome and predict one side gets the maximum benefit. So I don't have the solution. I'm not that smart to figure it out. But what I can tell is this won't go back to the way it was. So higher energy is going to probably be with us in the future. How high? We don't know what the new normal is. But there will be at some point, we will hit demand destruction. It will get to the point where demand will collapse. It will collapse violently, aka COVID style, but we don't know when that ticking time bomb is going to hit, but it will hit. So, but I don't think it's the 1970s where we go 3 or 4 years either. So there's going to be this in-between period where people are going to feel more comfortable, and I believe the market will rebound in some kind of connector wave, and that will be the bull trap of all bull traps. That will be the bull. Now it's tradable. It's very tradable. It's a bounce. But if you're just like musical chair, if you don't have the chair and you're left holding the bag, you're going down. Because I believe when that wave hits, that final wave down, you won't be able to just go buy puts. You're not going to be able to just go and sell. Your platform may not open the next morning. They may not be able to open the market because it's below the levels of the circuit breakers, and then they may close it, and they may close it and they say, you know what, we got to just open them. We can't keep the market closed forever. So I'm really sorry, but we're going to have to open the market 30% below where it was the day before, and we have no choice. That's how it probably is going to happen, guys. I'm not, and again, I don't want to scare you, but this is probably what's going to happen. Because that's by definition what has to happen in this in the cycle we're in. Because if everyone can just go buy puts, the market will never go down. So this is how it's going to go down. That's how it's going to happen. Okay. So just know that. So that's the situation we're in. So there's a lot of ways to profit from this. And our elite members especially, because we have been long commodities. We're long for many months ago. We are long energy since the summer. Long energy. We're long agriculture and, Archer Daniels and all those. We're already positioned for this. And also about a month or so ago, we were short. We were short technology. We bought volatility. And so yesterday was a very good day for all our members. Friday was a good day. So we're all positioned for this, but this is, like I said, phase 1, phase 2. You got to be positioned now for phase 3 and phase 4 and eventually 5. So think about how you're going to navigate those phases and know when those phases are going to come, because I think you won't have a lot of time to shift, because those algorithmic traders, those quants, they're going to move faster than you can ever move. Okay, so I think we'll go into the market high level. We'll look at the market right now and then see what the indices are doing, where I think they're going, and then we'll go into your questions that I have. Okay, so let me just pause this real quick, turn this off. So I'm just going to take a couple minute break here and I'll be right back. Okay, I'm just getting my setup organized so I can answer your questions. Okay, cool. All right, I'm glad to see everyone out there. So the market in general right now, so the best strategy is to kind of take this one cycle at a time. We don't want to get too far ahead of ourselves. Like, again, I'm not a prophet, right? I'm not like a fortune teller. I'm not going to say, oh, we're going to do this, and then we're going to come up here. We're going to we'll cross that bridge when we get there. We're just going to look at where we are right now in the immediate cycle. Okay. Because as the cycle develops, we'll get more data to make the right decisions later. So right now we should, and this, what I'm going to say here is this is the most likely path. Okay. There's other paths. So, here, is this AI? No, it's not AI. Hey, man, it's me. It's me. No, not AI. So, so anyway, guys, so here you are. This market situation here, we should bottom. We should bottom around the, 620, as low as 605. That, like, maybe like this, right? Could do something like this, right? But what I was saying, it could bottom earlier because, like, we have 1, 2, 3. So when we hit 3, we may not get a 5 because of the structure. The structure could be in 3. We could move in 3. So it could bottom early, right? It may not bottom down here. It may bottom here and rally, right? And rally back up, right? And where could it go? Well, it's likely to come back to like 652. And if they really pump this thing 677, I think that's unlikely. That's likely. So the path the market can take is we should be in some kind of bottoming process and then a rally, a bounce. And this is what I'm talking about. This bounce will be an epic bull trap. This will be the bull trap, a historic bull trap. I'll just say that, a historic bull trap. When it will end, I can't exactly tell you, but when it does end, you'll know. Is that you're likely to open down here, gap down. Like it will introduce itself, like I said, being below this level. That's how it's going to go down. That's how I think it's going to go down. But I don't know, like it could go higher, it could go lower, it could maybe it's hell, but this is the most likely path. And then this will define the market downturn. This is going to define, is it this generational crash? Is it just a correction? Is it just a normal bear market? This wave is going to decide that for us. That's what this wave is going to tell us. But we don't know. And I'm not a prophet. I don't know. We're in uncharted territory. This could be historic market crash though. It could be. I'm just going to leave it here. Okay. The next path is we don't bottom and we surprise everyone. There's no bottom. And what happens is you just continue to accelerate lower and then you have a market crash. It literally does that. It literally just finds the next area of liquidity, wherever that may be. And it could be as low as 434, but there's that. That scenario would have been laughed at even a week ago, but you can't laugh at that scenario right now. That scenario is maybe it went from under a 5% chance to maybe, I think, a 20% chance. Tonight doesn't look good for this. So we gotta wait. Why? How do we know? Because you need momentum to slow down. You need the sell-in to decelerate in these 4s and 5s. They have to decelerate. If the sell-in is accelerating through momentum, you're not going to get a bounce. It's just going to keep going. It's going to get worse. So that's the key. Momentum will be the key. Watch this. 4s and 5s means choppiness. Slowing momentum to the downside. That's what you want to see. Yes, we could still go lower and we should go lower, but we need to see that. If we're not going to see that, then you've got something like this, and we're in uncharted territory. So that's the situation we have right now in the market. Okay, so there's two paths. The most likely path is a bounce, a rally, and then at some point, a crash worse than this. Definitely worse. But we don't know how bad because it's going to tell us end of the grand super cycle, end of the 2020 cycle, end of the 2009 cycle. It's all going to depend, right? This wave is going to define that. No one knows. Now, if we look at the monthly cycle, one of the things that is concerning is we have rolled over, right? March is going to close. And we have an open stochastic on the stochastic RSI. Look, this is likely to come all the way down here, just like it did all the other times. Here, 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 right? Why would this be any different? Why would you think, oh, it's going to come back and do that? It's going to come back and do that. You have the last 1, 2, 3 cycles. It never did that. So why would it do it? It's not going to do that, right? It's not. So you're in a bear market. A bear market was born in March in the indices on the monthly cycle. The rallies are meant to be sold on the indices. Those I said the indices, not some stocks it may not be. So this has to play out now. The question is, when it's finished, where is price going to be? Where's price going to be? We don't know. That, unfortunately, this doesn't tell you where price is going to go. This just tells you you're in a new cycle to the downside. It's wide open to the downside. We've never seen it bounce up like it. So anyone that's hopeful for, oh, it's just going to come back, well, we've never seen that happen. So that would be very unusual. That would be way, way out. That would be now the 5% chance, right? We've never seen that. So why would you ever expect that? That's not the most. So should we expect more downside? And then at some point we'll have that monthly stochastic thing complete, and then everything's good. Now let's go to the Dow Jones and use the same kind of analysis on the quarterly stochastic, and because there's more data here. Now this is the quarterly. Oh no! What is this? This is your super bears. This is telling you, oh no, this is not good. Oh, we don't want to see that. Now, this doesn't mean that's the exact peak of the market because it's the quarterly lags, but it means momentum slowing down. Okay, now let's go to the 6-month chart. The 6-month has got something much more worrisome you have divergence here, and you're about to cross over. This would create a market catastrophe like 2009. You see, 2009 here, and then you kind of had a slow bleed through the 22 pullback. Now you made a higher high and a lower high, just like you had here and here. We all remember what happened here, right? Remember 2007 and 2000, the market just essentially crashed. This could be your first warning sign you are going to get a crash, so that's what I'm saying, guys. The market is turning bearish, right? If you're recklessly buying the dip and nothing's happening, I'm telling you, you're living in a fantasy where the data is right in front of your face. It's happening now. You do not have to listen to TV where they say, okay, you just don't look at your 401k balance. Okay, I lived through 2009. There were people that had to come back, that were retired. They had to come back to work, and they're like 70 years old because they lost everything. They lost everything. You know what I'm saying, guys? Like, this affects people's lives. Like, I'm just telling you, like you need to be defensive. This is the time to be defensive. It's a time to be defensive in the markets in general. All right. And now you have a fundamental story behind why to be defensive. Like, it's not even just the technical pullback. I mean, you have a real fundamental situation, and we haven't had the semiconductor sell off. What's that going to do when those sell off? You have private credit breaking. You have high yields, falling, high yield junk bonds falling in value. You have all the signs of stress, financial stress in the system that hasn't happened yet. You're going to have higher interest rates. You have price transmission effects that haven't fully been, seen. And this oil is not going to demand destruct to $50 tomorrow. It's going to have to go through this process we talked about. It's going to have to go high, 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 and stay there. And it's because it's inelastic demand for a little bit of time. And then, yes, it will collapse. So just know that process has to play out to play through this cycle. We're only in stage 2. We're early in this process right now. So that's what we have. That's all I'm going to say. If you want to know more, before I go into your questions, I have a website here. You can go to ElliottWaveSage.com. And yes, we did call the crypto peak and shorted that. And we recently shorted it and making money. We called the software peak. We did call the silver spike. Our members made a ton of money on that. My members there dropped. And we even had a higher short recently, and they made money there. So we were nailing all these sectors and doing this. This is my background. I'm not AI. Everything I put together is my own mind. Right. It's my own, ideas, but I listen to a lot of news and information and people, and I put together my opinion and my education, and I put together my opinion. Because people have tried to copy what I do, and I actually been emailed, they're frustrated because I'm like, you can't copy me because I'm unique. My brain is unique. You can't copy me. I'm not copying anything. What's in my brain is in my brain. You can't. So sorry. Because people on YouTube, they like to clone. And steal people's content, and you can't with me because I think it angers people because it's me. I'm unique. You can't clone me because I'm not using AI to generate video. This is my own mind, right? So anyway, these are my membership packages. You can see. I would say anyone who has the $5 a month has made way more than $5 a month, right? Way more. And then we've added Palantir and Robinhood to this pro group. And again, we actually nailed the tech top with all these. It took a little longer than we thought, but it all topped. They all topped like we expected. And then elite members, we go through everything. I do on-demand service. I just did 3 symbols for someone tonight. And very good. And you can just click that button. And there's so many, positive reviews. But I like to be able to say we don't get it all right all the time. So, not everything's a winner. So don't expect that either. But you can read through the site. I have a section on market on my write-ups. I recently added a report on CrowdStrike for people that are interested in reading that. But I'll drop things in here, in content in here as well. All right. So I think we're ready to go into questions. Let's go to your questions, guys, and start with the top. So let's see here. We have SVKB. All right, so I was able to do this from before the live stream. So SVB looks like we have this like 1, 2, down in 3. We have 5 waves up, 1, 2, 1, 2, 3, 4. So it looks like it's trying to make a 5th wave. It's actually in a box right now. And you're like, oh man, I said all that. What do you mean buy? Am I done? Like, and this is a funny thing. It's like, oh my gosh, you must be stupid to say buy anything, right? Because our system, remember what I said, this is going to happen like maybe the speed of the 1929 pullback, but it's going to rotate like 1970s, right? 2007 to 2009 was like a mini 1929 because it was essentially a deflationary crash. This is different. So the market's going to rotate as it crashes. And so we have to rotate with it, and our system does. So right now, we do expect a 5 and then a bigger pullback. So it is, as long as you stay above 2941, you should be good. You should be good to go. Okay. So that's something to think about. Okay. And this is hard for people to understand. Like, I want to show you guys something too. Look at what happened on Friday. I mean, look at that. So many people lost a lot of money. Okay. This was Friday. Now our elite members, and again, I use elite because we have the most trades open, obviously. We go to active trades. These are all the trades our group had open. Look at all the green. Green. I mean, it wasn't all green, right? And one of these was a short, so we were happy it's red, right? We were happy SMH was red or no, it's IONQ. Where is it? That one. Yeah, we're short IONQ. But I mean, but guys, look, this is the system in action, right? So anyway, so that's what I'm trying to tell you guys, because it's a rotational, like, I guess you can call it a rotational bear market crash. So that's what we're going to have. We've never seen this. This has never happened before that I know of in the market. So think of like think of mixing the 1970 rotation into the 1929 speed. That's what we're going to see. All right. So we look for 5 and then a pullback. Now, if we break this level, then we'll still be in the downturn. So you could still buy it if it comes back into the box. But if we can't take this out, then we have a bigger problem, because then it could be just a corrective bounce against this high. So if we broke 2781, I'd be concerned the uptrend won't continue. All right, Alcoa, I don't have the front part of this labeled, but you can see here it's some kind of 1, 2, and then we finish the correction here. Now, all we're seeing it right now is moving to like big 3 waves. Didn't really see this in 5 waves. I've looked at this subdivision before. It looks like 1, 2, 3. So what this also could imply is Alcoa may go through a nasty correction, right, where it could go like A, B, C. Remember, demand destruction. This may be the demand destruction wave. This may be face off 4 and 5 right here. So we're probably need this. I think we need that. So I think it's missing. So where can it turn? It may have already found the turn here, and but soon, right? And then it should go higher. But like I said, then it could have a massive rug pull after that, and there is a chance it could still push lower and be. We bounced enough to end the cycle. So I would just leave your stop at 5509, and I would not buy this again if it falls. If it falls, that means it's going to go deeper, and it would likely come back down to 45.42, and then we could look to buy that here again. Okay, so that's Alcoa, guys. Now, our gold Did it finish 4, start in 5? It seems like a wave 3. Yeah, so gold, I think gold needs one more high to make you feel better. Like I said, I get my information. I don't trade in a box. I am not so, overconfident and intellectually dishonest to where I look at a lot of different traders, investors, people that have good insight into a lot of different markets. They have strengths and weaknesses, and I follow them so long. I know what those are, and I use that in my opinion. So if it makes you feel better, most of the seasoned traders that are successful in gold, they expect one more high, and other Elliott Wave pros do too. So we do, but there are people that are saying no, the gold's topped. I don't think it has, but I'm not. Why am I saying I'm not that confident? Only reason is it really depends for me on the dollar index. The dollar index looks like it could still go lower, and if it does, then gold should rise. I mean, we can do this. Now the problem here is we may not see all the subdivisions because it went straight up. I mean, we could try. Normally that would be 5 there. Again, this is just based on my experience of labeling a chart that's like got so many 4s and 5s. Typically, that's what happens. I'm just trying to line this up right. Yeah, there. So 3, 4. What's good is, I mean, obviously the chart played out exactly how we expected it to. 5, one more high. So this matches everything else, one more high. So we're looking for that last high, right? And then if we go further back, that should be a cycle 3 or super cycle 3. This correction should take years, but it should even go higher after that. At least this chart, right? So we look at this, that should be the low. So gold, like I said, most of the gold miners and stuff should be at the low. So this should be a low. So we should be building 5 and then topping, right? This may be your demand destruction phase 4 and 5 I'm talking about. This may not be. This may be the inflationary phase. So just know that, and it can happen fast. These cycles can happen fast. So know that too. But we would expect more upside as long as we're above 212. All right. And something like that. So it is a wave 3. So you're right. So it's like you're doing a good job there. All right. Next question is, do you think it can break all-time highs? CRK. So we'll just finish that up. And it looks like it's 5 waves off this low. So I would label it 1, 2. 1, 2. I mean, it looks like it's going to. I mean, I can never guarantee anything. Again, I'm not a fortune teller. I'm not an astrologer. I can't guarantee anything. There's no one, no person, no forecasts, can guarantee any. If they do, you ever run away, turn your computer off. No one can guarantee anything, right? So something like this. So that's what I would go with. As long as you're above 1805, this should push out of this, and it's a resource play. So yeah, I mean, now would you say all-time highs? No, you can break this high. Now all-time highs up here. Good luck. Look at that. And again, that is, and I'm not here to hurt your feelings. I'm not here to hurt, but I'm saying it because I'm trying to teach people. Okay. This is I'm like a professor. I'm teaching you guys. Listen, if all you're worrying about is the all-time highs are breaking, that's what amateurs worry about. What you need to be worried about is, what can I lose if I buy it here? You should have asked me, if I buy this Quorum Comstock here at 23, what's my potential risk? Okay, that I'm telling you, 1781. Do the difference. That's your risk. Your reward, I mean, do you really think it's going to come back to all-time highs? I mean, I honestly, I doubt it. I mean, look how far, I mean, look at the stock. I mean, it could, I guess anything's possible, but that would be the last thing on my mind right now if I'm buying this. Right? My last thing on my mind right now would be worrying about all-time highs. So I would be just looking for this. So you're just looking for a three-wave move, right? That's what you're looking for. And anything more than that is bonus. It's bonus time. It's wow, this is great. I hit a home run, right? And that's cool. But never go into a trade ever, guys, going into how much I'm going to make. That is not how you need to think. Think about, what can I lose? What am I willing to lose? And accept that loss when you go into the trade. Already accept in your mind, I'm going to lose that money. I've already lost the money. I actually think the trade's going to fail. When I take the trade, I assume it's going to fail. In my mind, that allows me to hold it. And I'm not the only one that trades like this, guys. I read this stuff, these people that write books, they say the same thing, but I promise I didn't read those books. I just somehow have figured this out over the years, what they figured out, right? You're going to hear the same things I'm telling you. And you're like, oh, you're just, no, I learned this from doing it for so long. And then, yeah, I guess there's someone wrote a book about it too, because they learned the same damn lesson I did. So it's the same thing, guys. So I'm trying to teach you. Who cares? Like, yeah, I mean, I guess in my dreams, it could come all, I mean, good, $480. I mean, you can look at the market cap too. It's probably so heavily diluted. The market cap is $6 billion. To get the $480, it's got to go to 60 billion. And then it's got to like double again, 120. It's got to go to $150 billion. It's got to have an $150 billion market cap to get there. And then, I mean, I don't see how it's possible. It's too diluted. What the reason it's too diluted? They have too many shares. They have too much offerings and potentially reverse splits and whatever happened here. So that's what's going on, and that doesn't even include the debt they may have. So it's probably unlikely, but I would enjoy this. Okay. And again, I'm not trying to be mean. I'm just trying to teach. I'm just using this as a teaching moment. All right. Coca-Cola. The staples are a tricky animal because they should do well in a sell-off, but not in an inflationary set situation. So with Coca-Cola, we've always given it the benefit of the doubt. Now we are in a five of the grand super cycle. So you see that may be too bullish, the one twos. So we were looking for like a blow off top in Coca-Cola, but maybe it's too bullish, but we are at a major peak. Okay. Major peak. It's a major peak. Okay. So, it's going to do that. Now I'll get this out of the way. All right. So it's at a major peak. The question is, has it peaked? I think staples as a sector is at high risk of peaking as well in the grand super cycle. And this is the perfect storm for staples, what's going on right now. Okay, it's a perfect storm. When we get to phase 4 and 5, staples may be obliterated, right? They may be down here. Then people will rotate into them and then may be able to help drive them higher. So this staples may be the phase 4 and 5 play or 4 play. Like they may be a 4 play. I'm not saying we don't know yet. It's way too early, but I would be very, very careful right now based on what I'm seeing in the XLP. All right. So we do see some bearish divergence. It looks like potentially an end in diagonal. This looks like an end in diagonal. Okay. A 1, 2, 3, 4, 5. That's what it looks like to me. Let me just look at it one more time. Yeah, I mean, that's how I would look at it right now. So that could be the peak right there. It's too early though. See, it hasn't rolled over. Watch this trend line on the monthly cycle. You see that? Once you breach that, then it's over. The grand super cycle is over. And we could try a higher time frame. What's the quarterly? Not much there. So yeah, we just I think it's red alert. Like it's very close, if not has already topped. Okay, that's Coca-Cola HY short. So short setup is you just short it at market, stop at 82.09. That's a short setup. If you're willing to take that risk, that's a short setup. Okay, let me look at this individual structure. Yeah, especially if it can break. Let me just look at where we are. Yeah, it looks like it's bouncing early. That implies lower downside. So yeah, I mean, basically it's short against this level. Let's look at the daily. So you see it's trying to bounce. It's trying to bounce here. So maybe you let it bounce and then you reduce your risk. But you want to stay below this level if you can. Okay. That's important. But if you break that if you break that level, it's like what happened with the semiconductors, right? They break that level, then just let it break the level, let it do whatever it's gonna do, and then it's gonna pull back again, and then you just do the same thing again. And again, because look at the reward, it's worth it. So you're just gonna have to fight the market makers on this because they don't want you to time the top. And then HYG. Let's take a look at what's going on. I don't know if I have this charted. Maybe back, I think a long time ago we did, and then got messed up. Okay. So HYG. That looks like a bearish continuation pattern. Right? That's what it looks like to me. So it looks like, I think it just rolled over. I think that thing just rolled over. Yeah, look at that. See that monthly? Look at that. Boom. Boom. So it just rolled over. So again, short setup is just short at market and put your stop at like 80, 81, 82, because this has to, because if we come back and take it out, I mean, it would probably invalidate the structure that I have, right? It's going to, it would change things. So, so we're looking for, another leg down, similar to this leg, right? I guess we could try to, try to find where a box could be. 37.67, 41. So between 41 and 37, because it's a triangle, it's like not as straightforward to get the box like it normally is. So I'm going to draw several boxes here and see where the confluence is. Yeah, so that's kind of the general area that I'm looking at. As the wave develops, we may be able to pinpoint this better, but somewhere in this area here. I'm taking like 42, but again, I don't think we have a lot of data on this product, so it's going to be tough to do it. But it looks like the triangle's is going to break down here. Okay. So that's that. Then open and LPSN. All right. Open. Was this? I don't remember this company, what they do. So it looks like it did melt down like we expected it would. Let's get rid of that. So looks like we made 5 down, and then continuing to grind lower. People get buying the dip. They're very hopeful. So the C leg Let's probably move it down into like 3 waves. And get rid of that real quick. So more than likely, you have 1, 2, 1, 2, 3. You're going to need another 1, 2, 3 here. 1, 2, 3, and that will be wave 3. And you're going to need a bounce and a low, something like that. That's the only thing I can think of that it could turn into. Let me look at this because this is in 3 waves. See, this doesn't look like 5 waves to me. You see that bounce? It corrected the whole cycle. So this is a 3-wave move down. Okay, so it kind of changes this. So maybe it's not good to call that. Maybe we need to call it like a WXY here. So we may just kind of change this a little bit to a WXY. So it's going to kind of tweak this a little bit, the structure, so it makes sense even to me. There. So there you go. So that's what we're looking for right here. Okay, I don't think that's the low. All right, I don't think that's the low. Well, let's look. Yeah, I take that back. It is the low because you reset this in cycle on that bounce. So that is the low. So that's the low here. So looking at that 1, 2, 3, 1, 2, 3, but you see how they actually made a lower low. So it's likely to double correct. It's going to double correct here. A, B, and you're in some kind of C. That's the only thing I can think of. And so in this wave, it actually should make another high. So it should go a little bit higher. Would I ever play that? Hell no. But it should. I'm just going to tell you what, you do what's best for you. But I think it would go a little bit higher. But then I feel like it will have another leg down. Something like that. See, the cycle is over. This downtrend's over. You're in an uptrend. But see, you're still in the uptrend. You're on the daily. You're in a daily cycle uptrend. Let's look at the 4-hour. See, the 4-hour is in it. That's this correction. You see, it's trying to break that. Look, you see how it's about to break the downtrend right there. And see, that's what it's going to do. It's going to do that. And when it does that, and you see that down here, you see it crossing over, that's everyone's going to be short and they're going to get trapped. And that's going to create the blow up. They're going to blow up their account, and that's the wave 3. So that's what I think is going to happen. So that's what I think is going to happen here. Okay. And then of course, more downside. All right. But do what's best for you. I mean, this, not something I would trade, but I went ahead and looked at it. Live person, I think, looks like 5 down here. Made its own flat. It was a flat. So it looks like we had a flat here, A, B, C. And then looks like 3 down. Now you have to erase divergence. So this Y has to come down and take out all these peaks here. So likely more downside. So the thing is, this could be a lot of things because it's so early in the cycle of Y. Like look at the W. Look how long W was. You see that? This has probably a lot more downside. So it's likely to do that and then just continue lower. Maybe something like this. Again, I'm just speculating here. But something like that. Then you bounce again, go even lower. So that's what I would be looking for. Now, because it nosedived and already turned up, there is one possible path where it comes back and does that, and then it collapses. So, but I would say overall more downside. Okay. Boxes are provided in our members' videos, or if you want to go ahead and throw in a super chat, I'll give you a box. All right. Remember, it's $10 a symbol, $10 a symbol. So I'll do the one for you. So it's $10 a symbol. I'm not, $5 is over. I can't do it for $5 anymore. There's too many symbols. So I'll do Indo. And if you want to do more, I can, do more. All right. Indo is ended the downtrend. This big downtrend is over. And it looks like it's trying to come out of this wedge. And I'm hopeful that if this count is right, we'll see upside tomorrow or Monday, and we'll see this breakout. So if that doesn't happen, right, we've obviously, I think, ended this cycle here. We've ended this downtrend. You see we broke out. So if that doesn't happen, then we would go down, we would go lower, much lower. Okay, so if we come back and break 358, it's going much lower, but the overall structure is still bullish because, again, at the high level, right now we have this very bullish 1, 2, 1, 2, 1, 2. There's another count that's valid. That's 1, 2, 3, 4, 5. And if that's the count, we would actually come all the way back down to maybe like, I'd probably like 237, 233. So I can't rule that out. So, but the first sign of that happening would be a failed cycle right there. So we need the cycle needs to start to, grow. So hopefully this company can take advantage. It's always been just kind of this pump stock, but now they have a fundamental business, story that they can get around. And if they get their head out of the sand, they can take advantage of it. So hopefully they put out a press release for us or something. All right. Then CSAN. CSAN. I'll go back and do Boyle too. I'll go, before I do that, I'll do Boyle. Boyle is like natural gas. It's being suppressed, and it is right on the edge. So the bullish case has to hold 15. Okay. If it breaks it, right, this is a connector now, right? And if it's a connector, you would take another leg lower, right? So the idea here was we're trying to play a whipsaw up. Well, if we don't get that, well, then there's no whipsaw. Then there's no reason to think that. So then we would just assume the downtrend continues, right? There would be no other reason to assume that it would continue higher. So it has to hold this level. There's really no other count that would work for me. So I would, let me look at where we are. If we break that level, we would continue lower in 5. Okay, so there's a possibility of a big pump in this. I'm not going to lie, but again, if we break this level, then you're looking at something like a 1, 2, 1, 2, 1, 2. Now, could it be a 1, 2, 3, 4, 5? Maybe. So that's another count. But this 5 would not be allowed to go much further. So there is another count that may work. It's not so bearish. Something like that. Again, you'll be moving in 3, moving in 3, moving in 3. So that would get us like one little, maybe we drop back down to like $10 or something, right? It'd just be kind of like but you would need to keep all that bullish divergence. You'd have to hold this. It cannot break this low on the daily. Let's go to the 45-minute time frame. We could not break this low either. So there's 2 paths. There's the whipsaw path, which is probably coming to a head as soon as Monday, or there's this path where it makes another minor low. Because the only other path is a complete collapse, which doesn't make sense given the backdrop. So I think this. So there's 2 views, and honestly, I would say from a risk reward standpoint, right now the risk is so low compared to the reward. I mean, it seems like, it's like a very tempting play. I can see why you're interested in it. But yeah, even if it breaks 15.15, it could just bleed a little lower and still produce a pretty big reaction. It just can't. That would be tough, because then you won't have that like setup, a way to trade that. Maybe unless you chart pattern trade it against this bullish wedge here around 1063, but that's too far from 17. Okay, now we'll go to CSAN. Okay, so it's hanging around in the box. We do know boxes can go on for years, but they eventually usually come out. And you see it's starting to come out. It's trying to come out. So I don't really have much to say on this other than what I've already said. Right? It's slowly trying to come out, and you may have to be pretty patient. I wish I could tell you when exactly it's going to happen, but I can't. But eventually, it's likely to come out of this box and in the correction. This looks like an end in diagonal, so I can't say it still may tag this bottom of the end in diagonal, so it could still drop. But this area is likely to produce a move out of this. I mean, every time I see a formation like this, it usually breaks out later, but we just don't know when. That's the problem. We just don't have an idea when. See, it's already, to me, see all this divergence. To me, it's already breaking. To me, it's like already ending the cycle. So I think you're just going to have to be patient in that. There's really not much more analysis we can do. XES. Let's take a look at this oil and gas. We definitely were expecting more upside. Now, this was interesting. So this probably was a 1, 2, 3, 4, 5, right? And we corrected this. So let's go back and take a look at what we've got here. All right. Okay. So obviously 3 waves down. There's your bottom. Right. That's your low. And then you have another 1, 2, right? So we're just changed. We were more bullish. I guess we were too bullish on energy early on, but that's okay. It was definitely worth it. But it looks like you're now in year 3, right? And again, we would at least, I mean, when you look at this chart, at least probably you're going to get back to like somewhere around 163, 176 before it's tested. And what I mean tested, either it goes to new lows or breaks out and tries to go to the all-time highs. So I think something like this, you just want to buy in 3 waves is anytime you get a pullback from here on out. I can't recommend chasing it, but it looks like to me of like 1, 2, 1, 2, 3, 4, 5, 1. So 1, 2, 3, 4, 5. But I don't think that's an extended 5th wave. It's a racing divergence. So we can try to go to a daily cycle. We just look at this one more time. Yeah, 1, 2, 3, 4, 5. So this is all 1, 2. And then 1, 2, 3, 4. So you have a 3, a 4, and a 5. So on the shorter cycles, you're looking at a 3. You're in a 3. And then at some point you should get a 4 and a 5, right? That's what we're looking for. So I honestly, I'm not recommending selling energy. Now, energy, when we go into phase, 4 and 5, is going to have a violent correction and maybe even crash. It may have a COVID 2020 like moment. So at some point, the fun comes to an end, but it will be just corrected in this. So we don't know when that is. It could be 176, right? So what I'm trying to say is that once we go through these cycles, once the demand destruction hits, this thing is just going to drop like a rock. Now, it will correct March 2020. That's what it's going to do. It's going to correct the market. So it's going to drop. But we don't think that's happening. I don't think we're in that phase yet. I think this shows more upside. Okay. Right. Boyle, I just covered that. So you can, you already heard Boyle. Circle. I was trying to warn people about, and they still chased it and are getting blown up. So again, guys, I don't, this is likely to break 48 and go lower, and it could just go to zero. Okay. If you want to short it, you're shorting it against 137 now. The opportunity to short it is not as good as it was, but we expect more downside. I do think these lows break. Okay. Now these lows have to break, and you have to go through a full cycle. Like a full 5 waves. Look at this cycle. 1, 2, 3, 4, 5. You got to do that all over again. So to me, this is just getting started to the downside. Okay. It looks like something like that. So maybe when you get 5, you can get a rally, and then you have a way to short it. Like here. Because everyone will pile in and buy it. So that may be the short right there on 2 if it happens. Okay. So that's what we're looking for, something like this. The invalidation is if it can come back and take 137.26. The reason we think it's going to go lower is the structure, because it's we're down in 5 waves, and you can't end in 5. You need another wave down. That's the reason. I don't, GLTZ is not something I typically trade, but Palantir is likely to go lower, so this is likely to go higher. And again, if I want to analyze this, we just go from the low. It looks like you've made 5 waves up, and or let's take a look here. Yeah, 5 waves up in a flat. That's what we did here. Okay, so we made 5 waves up in a flat, right? And then it did a flat and ended. And that's where we have Palantir. We have Palantir turning down now. So you can buy this against 24.35. It's likely to make a 3-wave move. Okay, that's all we're looking for in something like this. Just a 3-wave move, an easy 3-wave move. So, so it may, maybe it can come back up to like 46.98, 52.29, something like that. That's all I would be looking for. It can always go higher. Now, traditionally, these bearish funds typically, they keep going lower. So you would expect this to fail. Now, for an unprecedented situation, it won't. It'll keep going. So this is kind of the area of a little bit of chart resistance here at 57. But I do think it's going to come up like I have here. Okay. All right. Then MSOS, okay, to short to 0 now. Well, let me look at the structure again. I can't give you trading advice or financial advice, so you always do what's best for you. But I'll tell you what our chart says. So unfortunately, we have not broken this low yet. Because of that, there is a possible bullish structure that still exists. A 1-2-1-2. It's getting less and less likely. You still hold this pivot. You have not broken this pivot yet. So again, the bullish structure is still intact. It is still intact. It looks bleak. It looks terrible, but I have seen these before, and it can, it could be a massive trap for our bear. But what I would wait is when this low breaks, then it's a short. Every rally in 3 waves in my system would be a short. So that would be your question. So officially, I would use in my system, not yet. I would wait for this low to break. And once it does, any rally, those are short opportunities. And because it's likely, highly likely to come back, test this low and break it. And if it breaks this low, well, yeah, I mean, and it's going, it's abandoned ship, right? It's abandoned ship. So we know fundamentally what's happening now is the worst case situation for these companies. The only savior is Trump can do some kind of legalization or something. Like, I don't know even if he can save it. Higher rates higher ag, higher commodity, higher transit. I mean, good Lord, they're going to be up higher interest rates because they don't make any money anyway. Typically, that's why these things are going to melt down. Okay. All right. Chevron. Yeah. Well, how's Chevron doing these days? XLE's been doing pretty well. It's starting to actually show signs of acceleration higher. And I'm sure Chevron's showing the same. All right. So Chevron, higher time frame. We have a 1, 2, 1, 2, 1, 2. It looks like 3 is born. And, it seems like it has more upside, right? I mean, I would be targeting 300. I don't want to say it's a smooth ride to 300, but it's going to be a pretty easy ride to 300. I mean, there's going to be pullbacks along the way, but it should hit 300 at some point, okay? It's likely to. Again, I can't guarantee it. And I did see, like I said, I'm seeing signs XLE's going into 3 of 3 mode. It may go berserk mode. So that's the way it is, okay? So this is energy's going berserk mode because look, this is going into a 3 of 3. It's going to take out all these peaks. So people aren't in energy because for some reason, I don't know what they were thinking, but they didn't get into it. They weren't buying it for all this time. But now it's breaking out. I think the XLE is one of the best examples to show you guys on energy and in the new era we're in. I mean, XLE broke out of like this. And again, I'm not going to show you the whole chart, but look, it's been consolidating since 2008 and it broke out convincingly. So this has been almost, 2008. So that would be almost, a 20-year, consolidation. Oh, it's just going to fail and come back. Hell, are you crazy? This thing's going to go for years. That's what I'm saying. This thing's going to keep going. That's what I keep telling people, right? This is why we were buying it in the summer. We didn't know about the crisis, but I was telling my members to buy this in the summer, right? We bought this, believe it or not, our members bought this here and even earlier, but we bought it there and we had a chance to buy it again down here and it's turning into berserk mode. So I'm just saying, guys, if you're not long energy, you gotta rethink your trading system. You have to be long. You should have been long energy at least a month ago when the first, bombs were going on. I mean, I don't understand, but it seems like no one's long energy. You should have been long energy months ago. And then even longer, but I get it. No one knew it was summer, but there's no excuse for not being long energy if you were, trading around February because this hasn't been, it's been going on for a while, this situation. Okay, guys, thanks again for the new subscribers. HIMS. Okay, I'll look at HIMS real quick. I'll take a look at HIMS, and then I'll see if I can answer any more questions or comments in the chat. HIMS is filling the gap, right? So I think, there's this self-fulfilling prophecy, gaps fill. Everyone believes it, so the gap fills, right? So it doesn't have to, but it's likely because that's what most traders expect, right? So you have this gap. Ultimately, you need to hold 1370. It has to hold that. If you don't, it's going to, the reason it has to, why does it have to hold that? Who cares? Well, the problem you have here is the cycle. If I draw a line on the daily cycle, you correct it, this whole cycle from this, from up here, right? Which is essentially the correction, right? We would assume it's the correction, right? It's not exact, but it's basically, or at least this slight. I guess we can say to ourselves, you've corrected this slight. So what that means is if you break that low, you got to take a whole nother leg lower, And you don't have any more room on the chart to do that, right? That means you're going to break the historic trend line that's been in place since its existence. This will be breached and it will collapse. It will go down like this did. Look, if we were trading it back here, see the historic trend line, and when it got breached, look what it went down and down and down and down. That's what will happen. So it has to hold this low. So that's the concept of backing into a low as well. Like if it doesn't hold, you're essentially saying, I'm buying HIMS because the only other alternative is it's going to go bankrupt. So either you believe it's going to go bankrupt or not. So if you don't see that from a fundamental view, then this is a no-brainer. You buy it, right? The only way this breaks, to me, this is my opinion. If that low breaks, that means there's insiders that know something about Ozempic that you don't know. There's something about that drug that's off. And I'm not here to throw anything out there, but there must be some, because there's no reason in the world these companies should be trading as low as they are from PE, especially Novo. The only reason I can think of is there is somebody knows something and you don't know it. So just give up buying it. You just need to walk away because it's like Lehman, it's like Bear Stearns, like the insiders know before you do that, and the technicals are going to show it. So if these stocks, if Novo and HIMS keep breaking down and break these lows, I am telling you, there is something out there they know and you don't. And when by the time you figure out, it'll be too late. You need to just abandon the idea of owning these. That's all I'm saying. Okay, this has to hold. Because fundamentally, it makes no sense for these lows to break and for Novo to keep going down. It makes zero sense. Then you're only left with one thing. There's a fundamental problem that no one knows about, but insiders at this point, and they're using it to liquidate or short in their, because they know eventually news will come out. And when they do, they're going to be enrich themselves. So now the long-term view on the chart, we have 5 waves up. Right? We have a 1-2 and a 1-2. So we would expect this at some point to come all the way back up, we hope, and go into a multi-year bull market for the years to come. And everyone in, the world's on these weight loss drugs, and these guys are printing money, and eventually I bet they'll be selling Zepbound too. They just don't know it yet. I think they will be the the vehicle of choice for the Main Street everyday American, or, that, they'll be buying these, and that's what's going to happen. So that's what this chart says should happen. If we break these lows, there's something wrong. There's something wrong. And I may do some more digging at that point, because there's got to be a problem. And then I'm recommending you guys just give up on it. I know, and it's just like a seduction. You're being seduced by the devil's apple at this point, buying this thing. Just walk away from it. But it should hold. It really should. You would think it would. All right, that's my speech on HIMS. PBR is the South American oil. They may be good. Yeah, so we like PBR. We've always liked PBR. We're trading with Brazil. Now, emerging markets can be under pressure because of the dollar. But I do think emerging markets seem like they should have a breakout of their own. That implies dollar weakness is coming to the market soon. Okay, maybe for all the wrong reasons, but it's coming. That's going to help, and that will definitely help that trade. But the problem is, it's like cross currents. You have this oil sector. Yes, PBR is good. Stronger dollar does not help emerging markets. Bad. So I think it's like choppy for PBR right now. If the last I looked at it. Do you have a list of cryptos you cover in the lead group? I do typically cover the lead group. I'll show you what I watch. Of course, a live stream, I can answer any quick crypto questions you have. But we cover, for crypto, we cover the stock equivalents here that you see listed. We cover the crypto miners. We cover just the crypto technology stocks. And then on our main page, we cover Bitcoin, these ones, Bitcoin, Zcash, Ethereum, these, and I don't talk about them much recently because they're in bear markets. There's no point. Like, why talk about something? But when it becomes a buy, I always bring it out. Right, I always bring it out, or a short or something like. So I'm always watching it. So those are what I watched. Now, if they're not on that list, then I'm not really watching it. I may occasionally look at the big list, and I have another list of crypto that I've done over the last, I guess 5 years. It's been that long. You can already see some of these have gone to zero. But I pretty much, all of these, I have charted. Look at that, all of these. I have charts on every single one of these. when we get to a major cycle low in crypto, I am going to go click through all of these one more time. If they have a bullish structure, I will bring them forward. That's what we did with Zcash, and we caught that massive run on this. Elite Group caught Zcash before anyone did. And I think I'm the only influencer that exists other than, again, insider whales that caught that Zcash pump. We caught it at the very, very bottom. And we'll do that again because look at all the crypto I'm tracking, guys. Look at that. I have charts on all this shit. Look at this. All of these from the years of doing it from you guys. So when the time comes when I feel like crypto's I'm going to go through all these. And then I bring them to the elite members. I'm like, okay, I think Hotcoin is good or ICP is good. And again, I just look at the structure and we bring them forward, right? Because that's all we do. So that's how crypto works in our group. Okay. So thanks guys. Appreciate everything you guys are doing. I'm going to go back through. I think that one I skipped over, I'm just going to go ahead and do it since you're a member on this one time, but normally it's like I say, it's $10 a symbol going forward. So let me go back and do a Sunrun for you. Angel. Yeah. Fernandez. So I'll do that. Okay. Run. Sunrun. Okay. Sunrun. Oh man, it wants to make this fifth wave so bad. It may still do it. It was actually green on such a bloody day because solar is stronger sector. It's not going to say it's strong, but it's not like XLE, but just you guys use your minds, right? If energy goes higher, the business case for solar is stronger, right? Because now, the calculation when you do, the net present value calculation of the investment is going to be more attractive because energy prices are more expensive, right? And this is an alternative to, other forms of energy, right? So solar's business case gets stronger with higher energy prices, not oil, but higher energy. Again, oil and natural gas affect everything. Right now, natural gas is the killer for electricity, right? But where's natural gas prices? They're not pumping yet. When natural gas gets pumping, solar should really pump on natural gas because natural gas feeds all your power plants, right? And guys, I know this because I used to work for a solar company, so I know how this shit works with solar. All I'm saying is the business case, but the problem with solar also is it's financed, and so interest rates that go higher hurt these companies too for people that need the finance, but not everyone needs the finance. I'll just say that. So that also shows cross currents. That's why it's not like doing that well. So natural gas and interest rates are keeping it down for now. But the chart right now, we have 3 waves. Here, you see that if we can get 5, we have more confidence that's a low, major low. If not, there is a possibility that we double correct this leg. So you have a W, an X, and then we come all the way back down. And I think we hit like $8, somewhere around there. Okay, I can't rule that out. If we can keep pushing higher, then we got something. We can work with something. We may be able to build something here. And again, bigger picture, you may have like a left shoulder head, and this could be a right shoulder. So again, if you're patient, play the long game, you may get rewarded, right? That's the idea. So that's the idea. That's the play. We'll see if it works out. Okay, on Sunrun. Okay, Bitcoin. I'll cover Bitcoin since I have a little more time, and then we'll wrap it up. So Bitcoin. So Bitcoin's bearish below the peak here. 76,000. Of course, our basic members all had a short opportunity here and made bank on that. So rallies below that level are likely to fail. So the bulls have to come back and take it out. We also have this like kind of sickly wedge, but we broke out of it, broke down. So now we have to assume we're in the next leg lower. So we were looking for 5. It looks like we just got 5 tonight. So now we're looking for a bounce. See this? A bounce. So that's what it's doing now. So we're looking for a bounce and then a much bigger drop and then a bounce, and you see. So that's what we're looking for in Bitcoin. Eventually hitting maybe 53,000. That's the most optimistic situation for a larger degree about a cycle low or a major low. If it doesn't hold, then it goes deeper. And the way to look for it's deeper is where is this? So if we don't get the structure, if the structure is missing this, and we just go down, let's say we just go down, right? Then this is going to fail. It's going to go even lower. So that's how we'll know. But it's too early to tell. So you won't know. So if you want to know, subscribe for $5 and I'll be following it every day for you. So you don't have to worry. I don't know if I'm like, I don't want to, like I said, I'm a humble person. I'm going to say, oh, I'm so good, I'm going to figure it. But I think we'll hopefully be able to see this and understand, get a good idea of where the low is, because it's a huge box, right? But make no mistake, it can still go deeper. But we'll be watching the wave, right? So my only advice here is when we get to this area, maybe you start a small position, but you need to think of this as I'm a long-term holder and I want to start to build a position. So I'll start a starter position and then maybe I'll add more. And if it falls great, I'm happy because I could buy more, right? It's just like you got to play it like you got to figure that out. So figure that out now. What's your plan? How are you going to add and ladder in? And because it could go deeper. I'm not saying it can't, but this should produce a rally and and potentially a big rally. That's again, that dollar weakness I'm talking about that could be coming to the market, right? Dollar weakness. Now, after this, we don't know. Some people say, oh, it's going to do that and go down to like 17,000 or lower. It could do that. I'm not saying it can't. Look, left shoulder, head, right shoulder. It can certainly do that. But we would, like we always do, sidestep it. We try to, we would see it, sidestep it, get out. Maybe we'll make a little bit, and then guess what? We'll just buy it again down here. So that's possible. So we don't know what the future holds, but this is a major area that it should reverse. I do follow other people that trade Bitcoin using different systems that have millions of dollars in Bitcoin, and they have been, since we broke down from way up here, their number's 48,000. So is that, and my system aligns with that number too. So again, all I'm saying is you're going to get the interest of people with strong hands. Strong buyers are going to probably get interested in Bitcoin at this level. People that, historically don't sell typically, they just accumulate, they're going to come in around this level. Strong hands. That's what I think will happen. Okay? That's what I think is going to happen. Now, but I wish I could promise a major low. I wish it could very well be. Now, the other thing is it could be a major low. But one of the things, like, look what Ethereum did in this situation. See how Ethereum made a major low here back in June 22? And yeah, that box was, people that follow me got that buy there, by the way, guys. We bought that box. Yeah, we did. But look, we had to, this low took another 4-year cycle, and then we have to correct and finish a double correction in Ethereum. So what I'm seeing with Bitcoin is it could do something like that too. This could be a major low, but the next 4-year cycle, we may not make it back up to these highs. We may do something like do that. We don't know. And then the next 4-year cycle bear market, it comes back down and makes the real low. So you got to prepare for anything, right? You got to prepare for anything because we are in a higher degree correction. Okay. So just know that. So, but the good thing is it should rally from here. We also have a downtrend line that once that's breached on the other side, that should also mark the end of this correction too. That's another thing we look at, but we're so far away from it. We're like summer. So from a time, so we have price and time. So by the summer, it's either going to be done by the summer or it's going to be done by price soon. Okay, one or the other. So if let's say it doesn't do nothing, let's say it just stays here. If it just stays where we're at and we go into the summer, the correction's over. I'm going to have to call the low in. Okay, that's the way it goes. But it's highly unlikely, especially since our pivot worked, right? that means we probably are on the right side of the market, right? So it's probably lower. But for right now, maybe we come back and back test 70,253, back test the wedge, and then boom, rejection, right? Maybe that's what's going to happen. Okay, guys. So I gave you guys Bitcoin. So thanks again for dialing in. Appreciate it. All right, I'm going to get off here and hope you guys have a good night. And definitely, I would say just we're in unprecedented times, dangerous situation. I hope the information I poured out didn't scare you. We're definitely not in a just sell everything mode. We're rotating with the market. That's what we're trying to do. And then when the cycles do come to an end, there'll be less things to buy. And then at some point, we will be probably just cash and short positions. But right now, that's not the case. We are still mostly long energy, long ag, long commodities, long the metals, I'll say miners. Gold, we're long. We're not long silver yet. Let's see how are they doing right now. Let's take a look. Gold and silver. Well, yeah, silver has got more downside. And gold, I said, could still come back in the box, and that would bring them back down to the bottom of the box. Okay, here. So the metals, but again, that's dollar strength. Where's dollar? Where's the U.S. dollar? U.S. dollar strength. So this is important because if the dollar can break down, that's going to help the metals. That's going to help the crypto trade and emerging markets maybe. But if this doesn't happen and we risk divergence, so this becomes another 1, 2, then that's the recipe. Believe it or not, I think that's the recipe for let's go to SPY. That's the recipe for this era. I guess I should use a different color so we can talk about this. Would be the red arrow. Okay, the red arrow happens if the U.S. dollar erases divergence here and crashes upward. If it doesn't, then I think you get the other path that I showed. Okay, so guys, good luck, and that's all I've got tonight.